Yeah, Sonam, so that Piyush has dropped a message. We can
Okay,
try
sure.
it now. Yeah.
So, hello everyone. I think we are live.
Yep.
Uh, so, welcome everyone to this week's live stream on the Smallcase platform. We are going to talk about what's been happening with our portfolios uh, and what's happening in the market. I think last week was extremely interesting, right? Siddharth?
No, absolutely. I think there's been a lot of volatility in the markets for the last 1 or 2 weeks. These global things have happened. So I think we'll discuss
Yes.
a few of those things today.
Yeah, so we'll be talking about, the macro, we'll be talking about our portfolios, we'll be talking about, the type of research and improvement that we've been doing at Wright Research. So thanks a lot, everybody who's joining us today. So let me share my screen and take you guys through, our understanding on what's happening in the market. Haven't got a lot to show, but some interesting bits, right? So let's start by talking about, you know, what's happening with the Nifty, right? If you look at it, there's been a very, very deep sort of a correction. I mean, it's been 6%, but looks quite deep given this huge rally that we've seen, right? And the market seems to be hovering around the 50-day moving average. It seems to be touching and moving around that. I think people have identified certain crucial supports around the moving average. If the market breaks out, then it breaks out. Otherwise, there could be a little bit more pain. If you actually look at our small case baskets, right, and these are published numbers on the platform, you would see that most of our baskets have, in fact, even in the month till date, which is in the October basis, become positive. They're beating their benchmarks, and actually, it's doing pretty well. Our balance basket, in fact, is doing the best, followed by different baskets. I think all across the board, things are relatively stable for our baskets. And yeah, I think let's try to understand what's happening with the market, and let's try to understand, where we could go from here, right? So first thing that we typically do when we when we talk about the markets, at Right Research is look at the factors, right? We do something called factor investing, where we are allocating to different themes in the market. See, the idea is like every investor, we want to be able to invest into the right stock at the right time, right? Everybody is well aware that the flavor in the market changes. Last year, infrastructure PSUs were the flavor, and right now that is not. Right now, in fact, some more defensive stocks are doing better. So we try to break that down using these things that we call factors that help us navigate the market direction. If you look at the factor performance, what you will see is that momentum, right, which is the price-based momentum in the market, has really taken a hit in the last quarter, and value as a strategy is doing better. So, we've been seeing, I think that few posts on Twitter where people talk about performance of quant mutual fund against other mutual funds. So, quant mutual fund typically has a focus on momentum, right? And that phenomena you're seeing across the board. But how long will this last? This is something that we sort of have to evaluate uh, basis of the macroeconomic. So that is what we will do in this presentation. And inside our strategies, if you look at it, our allocations are shifting. We are going from, we've gone from PSUs and infrastructure to right now a lot of pharmaceutical, consumer focused defensives. And we'll try to understand why that is happening based on the macro scenarios, right? So, talking about macros, I think, Siddharth, what are the important macros do you think are important right now?
Um, there's quite a bunch. There's obviously the geopolitical scenario that's happening in the Middle East,
Mhm.
a bunch of stuff that's happening in China, and I think we're hearing a lot of noise from many investors about what's exactly happening with China in terms of the market there, both on the boom and the crash that's happened recently. And then obviously from a US perspective, we've got so many things going on. There's the US elections, there's the federal interest rate cuts that have happened. And I'm sure there's a bunch more as well that's happening there.
Right, right. Yeah, I think the US elections are coming in 25 days, so that's a big event. Yeah, I think the bigger, I really believe that the thing that will have the deepest impact on the markets is the rate cuts, right? And rate cuts, 50 basis point happened, last month, and now if you see the inflation data, inflation actually come up yesterday or day before yesterday. The data was announced that inflation has increased in the US, right? So maybe the rate cuts will become slower in the future, right? So a lot to think. See, I think commodity prices are rising due to China. So a lot happening in the market. Most important thing, like we said, is rate cut. People expect some rate cuts to happen in the next cycle and continue to happen. How the pace of rate cut is there? How do other scenarios, for example, the commodity cycle impact this? This is something that has to be noted. But rate cut in itself are not a worrying thing, right? Rate cuts typically do not lead to slowdowns, right, or market crash, which is, I think, what people talk about in the news, that every time a rate cut has happened, something happened, but that is not actually the case. We've talked about it before also, that there is an economic scenario where you have recession, and then it's a scenario where you have expansion, right, where there's no slowdown. So if rate cuts happen in a recessionary phase, market corrects. But if rate cuts happen in an expansionary phase, then the market actually have a very positive reaction. So it is a function of how stressed the economy is. Right now, it is tough to say. There are a few things that tell us that there is some fear in the economy, but there are a lot of positives as well, right? And in fact, big thing that happened last week was the RBI did not cut rates. RBI, we thought would cut rates just after the Fed announced it, but they withheld it. Talking about rising inflation in India, the monsoons, the geopolitical concerns, commodity prices rising, food prices rising. So a lot of factors are impacting the global scenario, but still there is no very dark recession fear in the economy, as I would say. And if there is no, if we avoid a recession, then rate cuts end up being positive. If we go into recession, then they are negative. And yeah, a very interesting phenomena that we read through our research is that typically, whenever rate cuts happen, initially, if you look at these blue and green lines, they talk about what happens in the first 3 months or 6 months after a rate cut. You see that value strategies tend to do very strongly along when the rate cuts are announced. But after that, momentum or growth sort of takes over. So I think we are going through that phase where, in the initial part of the cycle, value strategies start doing well, and then we could see growth take over. Talking about another interesting data point, that the rate at which the rate cuts happen. Do the rate cuts happen at a very fast pace, or do they happen at a slow pace? That is also extremely important. When rate cuts are slow, they tend to have less impact. When rate cuts are very fast, they tend to have negative impact. So that is yet to be seen, how fast or so the Fed will cut rate. And I think maybe the election scenario in the US will have a role to play here. In terms of elections, for sure, it's very tough for anybody to predict what's happening. It seems like it is going to be neck to neck if you look at different websites. So that, do you follow any websites that track election results?
No, not at the moment. I just look at the New York Times or Wall Street Journal or something just to get a
Okay.
sense of what's happening. But I think it's close, is what I've heard.
Yeah, so I think
It's quite close.
different polling websites have different stats, right? Somebody is projecting higher win for Kamala, somebody is for Trump. Uh, so it's a very tough thing to say, not clear yet.
Yeah.
Uh, but a lot of interesting things happening. It's very entertaining work as well. Yeah. So apart from it, I think the big event that happened was escalation in the Iran-Israel region. Iran is a nuclear power, and there seems to be a very high escalation that has happened between Israel and Iran. And we saw that, initially when the market corrected last week, right, we imagined that that happened because of this escalation, right? Because that happened right after the Iran bombings, right? But in fact, if you actually go and look at the global data, that is not the case, right? The case, because China, Japan, US, everything was going up while India saw some correction. But nevertheless, if you talk about periods of war, you would see that periods of war end up being markets have a slight positive bias in terms of returns during periods of war for some reason. And whenever escalations like Ukraine happen right now, there seems to be a short-term escalation, even given the scale of the crisis. Obviously, there's a lot of changes that would happen around Ukraine. There's a lot of supply chain disruption happened, right? In the agriculture supply chain, in oil and gas, and a bunch of things. But the impact tends to be short term. And what we have seen is during times of these escalation, people start going towards high quality and large cap stocks. So those stocks tend to be better performer compared to other stocks. And yeah, over the last decades, we've seen that any escalations have tended to have short term impact with quicker correction in today's market scenario, right? Obviously, one big worry here is the crude prices. Crude prices have risen, and if crude prices rise, then that will lead to higher inflation. I think the RBI policy also said that, right? That higher inflation, that crude prices are a worry right now, and they will watch it till December before they can cut rates. Also, on metal prices, you're seeing that reaction. I think metal is more due to China, that the China recovery. I think even yesterday, China has announced some massive stimulus, right? So let's talk about China versus India. So that you've done some research on this topic. So why don't you talk about this a little bit?
Sure. So I think yesterday was quite key for the markets. There was a lot of the markets were expecting another stimulus from the from the Chinese government, and I think they've come out with about another $283 billion worth of stimulus for the markets, and a lot of it really varies in terms of providing additional funding, sort of making it easier for investors to, especially institutional investors, sort of invest in the markets by putting different assets for collateral. So there's a lot of positive news that's come out. So, but I think we'll have to wait and watch on Monday what happens from China's perspective. If the Chinese investors think that's a strong enough sort of stimulus for the market, because they've already seen one stimulus measure, I think that came out about a week or two back. That had a very strong impact on the market, but then it sort of fizzled out towards the end of last week.
Right, it did correct because at that point in time they sort of withheld, right, some measures, which I think now they have announced. So
They were
let's
just
see.
announced that yesterday. Yeah, absolutely. I think around $283 billion is what I.
Yes, I think on this day they people are waiting for a lot of stimulus which they did not announce, so market corrected.
Correct.
Now they have announced it.
So it's
And
but yeah.
yeah, and do you think we will see money flowing in from India to China now?
So I think there is a little bit of a trend. I think in terms of the FIIs, obviously they've moved out a lot of the capital from. They are moving out a lot of capital from India. Now, whether that's going into China, I think it might be split between different sort of geographies. But I still feel that there is a very strong potential for India. I think our earnings are looking strong. There's a few strong positive factors here as well. We haven't seen the interest rate cuts from the RBI. That'll probably happen in about, hopefully in December, maybe January next year. So I think there are a few strong measures for sure.
For sure, I think India is a much more stable market if you look at it from the charts, and but yeah, China has been in a slump, right? They have actually been in a slump. And
Yeah,
while
there is a deflationary mode as well, right? Which I think that's been there for the last nearly 3-4 years, if I'm not wrong.
right, and see these announcements, while they're positive, might not have an immediate impact, right? It
No,
is,
no.
it will be needed to be seen where how the impact happens. And maybe incremental money could go more into China, but we don't think that India is going to be, people are going to take money out of India to China, right?
Yeah, no, absolutely not.
I think the rate of growth also, India being the smaller economy, our rate of growth will also be faster in the next decade or so. So, we'll continue to be an attractive economy. Obviously, there are impacts of China. Whenever China recovers, you see big movements in the metals, in the commodity space, which we are already seeing, right?
No,
Uh,
correct. And I think there was an interesting research. I think we'd also sort of spoken about it a few weeks back. That typically shows that if the per capita, the GDP per capita goes above a certain number, which I think is around
hmm.
2,500, 3,000, then there's typically an inflection point. China saw this way back, I think, in
Yes,
2000s.
yes,
We are just crossed that maybe a year or so
right.
back. So that inflection point is there, and history has shown sort of strong growth from that point.
Yes, so I think that that data point I've also seen where this has happened for Dubai, for China, for different geographies. That once they cross that data point, they see big inflection, and India is at that point. So the growth will definitely be stronger, but we cannot time it in a short-term basis, right?
No, no, absolutely.
Short-term, yeah. But yeah, I think if you were to talk about short-term, I think this impact will be seen in metal prices, metal stocks. So that might be interesting place to look at it in the crude segment as well. Now, another concern that people have is on the valuations and the earnings. See, earnings in India have been on a slowdown, right, in the last quarter. And even this quarter, what do you think? It's going to be a very modest quarter, right?
It'll be a moderate quarter, I think. Yeah, I think that's
Yeah.
the sort of outlook people have sort of expected right now.
I think, sales growth, margin growth, all is going to be pretty similar to last quarter. Maybe there will be a little bit better EBITDA growth for a few companies. In terms of sectors, I think some consumer durables and a few infrastructure linked stocks, in fact, real estate are going to do really well. Banking is going to be moderate, autos are going to be moderate, private vehicles are probably going to do better than passenger vehicles are going to do better than four wheelers, and then you will see uh, interesting trends maybe in the FMCG. We're expecting FMCG to do really well, but monsoons have been very, very random, and that has had an impact. But there will be quite a few interesting. I think it will be very stock specific, whatever happens in this earnings season. A lot of interesting things to be seen. But yeah, if you talk about valuation, if you talk about, is India extremely overvalued? Are we sitting at the top of the mountain? No. See, we've seen 6% correction, hardly any recovery from there. And in terms of macro data points, if you look at it, different macro data points are telling a different story. There is obviously a little bit of sluggishness. There's a little bit of we're not in a very fast growing numbers in terms of the economic numbers, but still we are doing strong. And I think in due course, when the rate cuts come after a couple of quarters, when the global scenario becomes clearer, we'll see things recover. That is what our read is. But in terms of valuation, we are not sitting in the top of everything. If you look at different sectors, in fact, there are few sectors which are actually overvalued compared to their historical averages. Let's look at auto. Let's look at you look at bank, look at private sector, even pharma or FMCG are not extremely expensive. Real estate, is going to come up with good earnings and it's undervalued right now. So, so in terms of valuation, there is a lot of level of comfort, and we're actually seeing different stocks and sectors do extremely well, even in this market where the sector rotation is happening at a very, very rapid pace. So that is broadly what we had to cover in this presentation. Let's go over and take the audience question. I think that's the more interesting part, right?
No, absolutely. We've got quite a few questions. I will try to take them up as they've come sort of chronologically. So if you're listening, anyone, please feel free to keep commenting. We will sort of take them up as they come. So the first question that I have here is thoughts on China. It's a very broad question. I think we've kind of answered it to some degree. And there's a newsletter as well today, but any sort of
Yes.
high-level thoughts?
No, I think, see, Chinese economy has been going through a slowdown, and now the government is taking measures to sort of bring back growth into their economy, right? Chinese economy, let me share the blog also. Okay?
Yeah.
Chinese economy has been really underperforming, right? There has been no recovery for a while. And now, if you look at it, Chinese government is taking a lot of stimulus measures, right? You can see the GDP growth has been much slower than expected. And they are cutting their mortgage rate, they're cutting their uh, interest rates, they are now giving direct money to people through stimulus packages. So a lot of interesting things that can actually revive the economy. But you actually look at the uh, economic conditions in China, they have seen a lot of slowdown post COVID, right? So we have to see how that recovery happens. There's a lot of industry that has also moved out from China, right?
No,
So we have to
absolutely. And I think
see.
it's a very sentiment-driven rally right now
Yeah,
because
yeah.
there's been some change in the policy measures that China has taken. So that could have just
I think the Chinese stocks were extremely undervalued for a reason,
yeah.
and people saw that this big boost of money into the economy could have a potential to recover this massive market. I think that is the reaction that has happened, but actual impact of it we'll see in due time, right?
Yeah, no, absolutely.
But anybody looking at a broader understanding, please go ahead, look at our latest blog, and you can understand the scenario more deeply.
Sure. So we've got a question here from Suresh V. He's asking more on a general basis. Apart from news, what should an investor sort of check before they sort of invest in the market? And I'll sort of extrapolate, maybe directly investing for them or even if it's through small cases. So how would you sort of look at that?
Apart from news,
Yeah, apart from any market news, many market driven information, is there any other things that you would typically look at as an investor?
see, what I do honestly is, obviously we look at a lot of data, right? How is, let's say, the trend changing for different stocks? How are the estimates changing, or how are the fundamental metrics changing, right? So if any stock or sector you are looking at it, let's say any stock you're looking at it, first of all, look at you know how is the future going to look for that stock based on the current economic situation, because the sector dynamics, right? So you have to understand in that way how is the earning expectation coming in the next quarter, how are analysts talking about that stock, what is the management commentary. So that is stock specific. What So I think that is something that you can do when you're looking at stock. Even when you're looking at a basket product or something like a small case, what you should do is I think what we have really, done some research, and we've talked about it also. So that is, we're looking at now fear and greed in the market. What is the amount of fear versus what is the amount of greed in the market? When what we see is whenever there's a lot of fear and everybody's panicking, if you buy at that point in time, you get better XIR returns, and if you actually sell when people are extremely optimistic, that tends to have a better result. So trying to I think instead of jumping into the market when everybody is very positive, you should actually invest when you see some sort of correction. So for example, when the market's corrected in the last week, I actually put in a lot of my own money, and I deployed a lot of client capital, because that is a great opportunity to get to the market. If you are coming in for the long term, if you think in the long term the market will give you that opportunity, then these corrections are a good time to enter it.
Sure. So while we're speaking about corrections, I just seen sort of two questions here. One is from Raghav, one is from Satish Kumar. Both are sort of in the same tone. Is it the right time to invest? Is it the good time to invest? Should they be topping up their portfolios on small case directly, across the board when the markets are falling?
See, I think it is as good time as any to invest. Actually, the stuff that I was talking to you about, which is on the fear and greed, right?
Mhm.
It still shows that there is a level of fear that is there in the market. So it's a good time to you know invest for the long term, right? In terms of economic rationales, we've talked about it. What's happening, right? I think Indian policies being conservative, focused on keeping a good fiscal balance, will play in favor of India in the long term. We might see some growth moderation, but then once the global scenario clears up, it would get better. So I think it's a good time to sort of allocate, given that there is uncertainty in the market, right?
No, absolutely. We've got a few questions here specifically to small cases, and there are a bunch of others on US elections, etc.
Yes.
as well. So the first one is from Mohammed Hussein. He's asking, are you providing any rebalances on Alpha Prime on Monday?
So you will have to see that on Monday, I guess.
The next question here is from Mr. Finance Guru. He's asking, can you share any thoughts on the new India small case? The government has released some new sort of PLI schemes, and he's wondering if any of that could benefit any of the stocks that are there in the portfolio.
No, definitely. I think New India right now, if you look at it, has become a little bit biased towards, it does have a lot of allocation to the manufacturing space, right? So that is why it saw very strong growth. And then if you look at the recent times, there has been a little bit of slowdown, right? It's not, as bad as, let's say, if you're looking at a pure defense play or a pure, uh, let me just share my screen also. So if you look at it, there is, uh, it's done very strongly in the last 2 years, right? And recently, couple of days back, yeah, sorry, it is showing the rebalance details, which we shouldn't. But anyways, see, we are, and it's showing the old one for me, so don't worry about it.
Yeah.
Yeah, but yeah, so see, we've seen a very strong performance, and there's a bias towards manufacturing sector, which tends to be correcting. But we've seen even defensive stocks, so even food manufacturing, right? All of those stocks also fall under PLI, and they tend to get allocation in this portfolio. And I think that recent PLI announcements, we've seen some impact happen in the particular portfolio as well.
Sure. So there's a question from here from Mr. Ronak. He's asking, right momentum has worked really well for him over the past 2 years. He's seen a strong XLR of about 50%. Could we look at creating a need-based portfolio that focuses on adding only quality stocks as well?
Quality stocks.
Yeah.
I mean, see, we had a
Maybe HNI is probably the right approach here for the
yeah, HNI is definitely a right approach. It is the need-based rebalancing, right?
Yeah. So Ronak, maybe you can check out the HNI quant portfolio on small case. It has a much higher threshold in terms of the minimum investment and the recommended investment amount, along with the fees, obviously. But that could be one that you can look at in terms of a need-based portfolio. Okay, so we've got one or two more correction-related questions. Let's talk about elections. So I'm seeing a few questions on the chat about elections. So this is a question from Mr. Ryan. He's asking what will happen if Trump wins or if Harris wins, because we've not discussed that specifically to the markets, and more from an India perspective, what will happen? Like, is it good? Is it bad if one of them wins for us specifically?
See, I think, if Trump wins, he will be much more focused in the domestic economy, right? He will sort of try to suppress a lot of imports and will focus on the domestic economies. He will also focus on giving tax cuts to the richer public. I think that's what the policy is. If Kamala comes, then she will continue the same policies as Biden, I assume. And I think the big difference will be on the geopolitical thing, right? Trump might stop funding the Ukraine war, right? Which will lead to probably Russia taking over Ukraine or something escalating in that sense. Kamala will continue to pay money to Ukraine to fight the war. And I think on Israel, I think both are similar. I guess Kamala might be more diplomatic, Trump might be more random. See, that is
Sure.
yeah.
But I think when Trump was there, the markets did do well, historically speaking, at least in that 5-year period for the US market. So do you think that could
But no, but see, I was listening to Obama's speech yesterday, where he said that market did well when Trump came in because I was working on the market for 8 years.
Sure.
So that
So a
was
lot of that
speculative.
has a carry-on effect. Maybe that's
Yeah,
what.
yeah, it has a carry-on effect, right? So whatever happens for 4 5 years, that is what leads to growth in the next year. So I mean, it's very interesting. And I think, see, broadly, policy wise, they tend to be very related. I think what's worrying is the level of disparity in the American country itself.
No, absolutely. So Gamer Guy has asked a question about the maximum amounts of one can put in HNI, right? Small case. So the recommended amount is typically around 25 lakhs. There is no upper cap. You can do, whatever is appropriate for yourself. And the minimum amount is around 4.5 lakhs, if I'm not wrong. So yeah, you can check that out on the Small Case website. Neo is asking, during this time, is it better to invest in Alpha Prime or Momentum if you look at it on a 3-year horizon? I think that's a very risk-based question, probably.
Yeah, so I think, see, it is very specific to individuals. And on the small case platform now, we are no longer giving investment advice as such. These are research products, and you have to take your own judgment on where to invest. See, in terms of, if you try to understand the product, Alpha Prime is a high risk product, right? It is, I mean, it's not extremely high. It's not like a crazy product, but it is slightly higher in risk in terms of, in comparison to momentum. Momentum, might be a much more balanced sort of a momentum strategy. So, if you're a moderate risk investor, you would like the research that we put into momentum. If you want to make high risk, high return, then alpha might be the way to.
Sure. There's a question here from Jitendra. He's asking about factor investing. So given the current factors that are relevant today, do you think momentum is still a good factor? Or do you think the focus is now on value or quality specifically?
Right. So, see, it's something that we have talked about a few years ago on the small case platform is that in our momentum strategy, right, in Wright Research momentum, we don't just do price momentum. We are not just based on price, but we also look at earning momentum. All our momentum strategies, momentum, alpha prime, all of them combine earning and price momentum both, right?
Yeah.
So, so so while price momentum, see price momentum, so that if you look at it last month, even if you're looking at 1 year worth of trend, you would still find that defense stocks are the momentum stocks in a sense, right? In various indicators, and they have corrected quite a bit, right? So given that factor, because we combine earning momentum with price momentum, we have selected stocks that have been relatively stable. And while price momentum might see short-term correction, see, I think it will recover pretty soon, right? But we actually have a focus on a combination of things.
There is a question here from Pankaj Agarwal. He's asking about any thoughts on the Ola Electric stock specifically.
It's again extremely interesting, very tough to comment. I think all the complaints that are coming, right, they might be quite serious, and I think the corporate communication was also not on point. Whatever happened on Twitter, I think they need to work on that. And yeah, I think so. Given the scale of complaints and the escalation in the news media, you have to be a little bit careful with that stuff, I guess.
So there's about three questions that are roughly similar. I'll sort of bunch them up. This is from Sumit Mehta, Sumit Neolia, and Pratik CE Group. He's asking, they're all asking, one, what sort of small case should they invest in given the current context? And that can be a horizon of, let's say, 3 years. And Pratik sort of wants to sort of add more money. He himself has already got, I think, 5 of our small cases: Alpha, Momentum, New India, Balanced, and Titan. And he's wondering which of these would he want to should he add more money in the current context. So two parts to that question, I suppose.
So let me, I think the best thing to do is take you guys through our portfolios. What are the different portfolios that we offer, right? And which could be suitable for you. See, everybody will have a specific thing that works for them, right? Nothing, there is no one answer for everybody. We can also tell you which are the most subscribed ones if that helps you make the decision, right? So let us go over our small case set. Here, our most popular ones, of course, are alpha and momentum, right? Now, alpha and momentum are both momentum-based strategies, right? They are based on price and earning trend. This tends to be a very strong factor in India. This tends to do really well in India. So therefore, we have best performance in these portfolios and also most number of subscribers in these portfolios. Along with it, we have an option called New India Manufacturing, which follows, quantitatively the philosophy of let's say momentum, but its universe is limited. Its universe is those stocks where we are seeing government stimulus, PLI schemes, and new age manufacturing and all that, right? So it's very specific to different sectors. This obviously because that is a theme that has gone in India very strongly for past 2 to 3 years. This particular portfolio has also been quite strongly, and that stimulus will continue going onward in the future, so it will be attractive for investors going forward also. Then we have balance, which is slightly, I would say, more moderate risk than momentum, but still a very good strategy, strong strategy. This is our oldest strategy. We've been running this for more than 5 years, since July of 2019. And it was there during COVID. It was during all sorts of bull and bearish phases and still has done quite strongly across the board. During COVID, we only saw 18% correction in this when the market corrected very drastically. Now, we also have small caps, which is, following philosophy of multi-factor, but with a universe of only small caps. Now, this one, if you look at it, has done quite strongly as well, right? And we see a lot of interesting small cap stocks. So this portfolio is really interesting, even for me. Then you have our Titan portfolio. Titan portfolio is more large cap focused, more quality focused. It is much more steadier if you look at its performance. Then we have our new HNI quant. This is specialized. You see the minimum investment criteria here is much larger than others. You also have the recommended size is larger than others, and the number of investors that are invested is lesser than our other small cases. So the information is much more concentrated, and you can invest larger amount of sums and compound them using HNI quant. Plus, you also have need-based rebalancing in this one. It's not on a regular basis, but it's on a need basis. So we'll only do it typically whenever there's a need to rebalance. And then commerce, fintech, biotech, and all those things. It's doing well right now. We're seeing so many e-commerce stocks move strongly. Right? So, depending on your risk profile, depending on your preference, right? If you, let's say, want to take some risk, you're young, and you want to build your wealth for a few years, I think going with alpha prime momentum might make sense. If you want to invest big amount of money, then definitely do have a look at our HNI quant portfolio. If you're more moderate risk, then I think Titan or Balance might be more suitable for you. And if you like small caps, go with that small cap strategy. And thematics like new Indian manufacturing and innovation are quite interesting, especially in the current scenario.
So there's a question here from Jayesh, and I think there's a few other questions that might relate to it, and I'll take them up sort of consequentially. Jayesh is asking, if I invest 100% of my planned SIP into my small cases, should I adjust it to say 60 to 70% now to have more liquidity? And I think this is more in regard to the correction that's happened in the market. That's how I sort of interpreted the question. Right?
Uh, yeah, I guess. See, you can, you know, keep some liquidity to invest whenever the market is giving you that opportunity, right? Whenever you're seeing some correction, you could do that. Or you can do like a regular SIP or a lump sum as well. I think even right now we are not at a top, so it's a good time to accumulate.
Sure. There's a question here from DM, and I think I've seen a question from Ayush as well. So DM's question is specifically on the HNI and the PMS. Are they both different? Is it one of the PMS strategies? What is the exact difference there? And Ayush's question is more to do with, is there a service that we provide where customers can give funds to us and we sort of manage them without the intervention of the customer? So somewhat related.
So I think there are different portfolios, right? HNI and PMS, they are different things. There's no overlap as such. There are a few similarities that we are all working in the same universe. And in terms of how it works, HNI is slightly similar to PMS because then there's a need-based rebalancing. You put in larger amount of capital. Even in terms of universe, we expand our universe for the HNI portfolio, but we keep the universe slightly limited for other portfolios. So there is a little bit of a flavor similar to our PMS, but obviously they're different products. Secondly, a second question somebody asked was, how can you give us money to manage? That is PMS, right? That is called portfolio management service. It's a managed account where we open an account for you that we manage, right? That's what PMS means.
Sure. There's a question here from Deepak, and I've seen a few sort of pluses on this question. So basically, on 1st of October, he doubled his investment in Alpha Prime, and this was just before the correction happened. So he's saying, one, is that a bad move? And two, if the market, if this happens in the future, how should he think about doing lump sum investing before he sort of invests in the market? Because he'll never really know if a correction is coming up, right?
Yeah, see, I think anticipating correction is tough, right? For example, nobody knew that Iran is going to attack Israel, or nobody knew. Even the China stimulus, it came out of a sudden, right?
Yeah.
So that is very tough to sort of foresee, right? But typically, if you look at the market trajectory, right, of fear and greed, every month or couple of months, the market gives you some sort of a correction, which is an opportunity for you to add money. So I think doing that would make sense if you actually want to time it. See, if you've invested in the beginning of October, there's no harm done. I think we are still positive on Alpha Prime, right? I mean, trying to time the market can be very time consuming and difficult also.
Sure. There's a question here from Mr. Vinay. He's asking, specifically with the small cases that are going to be rebalanced in the future, in the coming months, are you going to make a shift towards more protective or defensive stocks until the market sort of stabilizes, or do you think there's still opportunity in the market right now?
See, we have made a lot of defensive tilts, right?
Mm-hmm.
In fact, there's hardly any exposure to cyclicals across the board. There is some metals and a little bit of exposure somewhere, but we have made defensive tilt. I think that is going to be a good strategy for a few months or a quarter or so. And then I think, my hunch is that cyclicals will make a comeback, but, we'll have to see what happens.
Absolutely. Dr. Simon Awale is asking, in the last 2 weeks, the US has been doing consistently well, and I think we can see this across the board in most of the major global markets, whereas the Indian market has sort of shifted to a bearish pattern. What could be the reason? I think we kind of covered it, but any sort of top level reasons there? And is it that the Indian market is so prone to war news or any other sort of external events or news that happen in the global scenario?
Right. No, I think that's a good question. See, we are seeing some, movements in India, very specific, right? So we saw that chart in our blog also. China did extremely well. US was positive. Nikkei, which is Japan, was positive, but India saw some correction, right? Very interesting. Again, I think quite a few things are happening, right? So we talked about all of these macro events. We have not talked about, see, there are regulatory concerns in India, right? There are announcements that are happening in the FNO space, right? Which will lead to changes. For example, Bank Nifty contract is going to end in a few weeks, right? Which will be a huge thing. And a lot of disruption in the market is happening, right? Nifty contract size is going to go up 3 times or something, right? And people might be preparing for that. So there's a lot that is changing. Overarchingly, I think China impact could be one thing, and then whatever is happening in the regulatory space could be, I think, some of the reasons why we're seeing correction. I think that is a very healthy thing, given that people, every person you talk to on the street is worried about valuation. So the market giving you a healthy correction is always welcome, right?
Absolutely. There's a question here from Mr. Ayushman Gupta. He's asking again during corrections, and that's the theme I think for now. If the small cases that we have may correct more than the market correction, and the small case exposure is towards more hot themes, but when there is a PE compression of themes, what will we do? That's the sort of question that we have.
I didn't understand if that. Can you repeat
So
that?
he said when there is a PE compression, I'm not sure what he means by PE compression, but when there's a PE compression of the themes that we have invested in, what would we do if that correction happens? So I think the broader question could just be if the themes that we
Yeah,
have
so I
invested
think
in,
what he means from PE compression is that he's trying to look at the business which are at a very high PE, right?
okay, yeah, sure.
And suddenly there's a correction that happens in that space. See, I think uh, the big thing for us is that we are sector theme factor agnostic. We actually shift momentum strategies. They don't care where the momentum is coming from. They invest into any sector where they see momentum. Similarly, for our other factors also, we are agnostic of factors. In terms of, yeah, obviously new India manufacturing, we've seen that PE compression or that correction happen, right? We were doing extremely well, and then I think over the last couple of months, this portfolio, hasn't done bad, but has done slightly worse than our other portfolios because the themes we were betting were highly cyclical or highly manufacturing driven. We're seeing some activity, but the portfolios are highly diversified. We will move out of those themes whenever there is a PE compression, something that happens. We tend to be agnostic of factors and sectors.
So Mr. Sumit was asking about HNI. So Mr. Sumit, you can just sort of rewind maybe 5 minutes back. We've just covered that. Prateek is asking about what would be a good time to subscribe to, let's say, the small case that we have, given that small caps have been on the rise for the last maybe 1, 2, maybe 3 years or so.
Right, I think small caps definitely have been strong. See, given that there is a level of fear, and nobody can deny that there's a level of fear in the market right now, right? In such a scenario, people tend to like large caps. If you look at last month, Siddharth, in the month of September, Nifty has done better than the small cap universe, right?
Mhm.
Or the mid caps. I think. Given this level of fear, you see selective small caps do well. There are certain small caps that are still doing extremely well, right? You're seeing stocks hitting circuit every other day, but it's a very selective set. So therefore, investing into selective set makes sense. Not going with the index. I won't say would be a sensible thing. So if you're looking to allocate to our small cap strategy, we tend to be stock specific. So if you're looking to allocate right now, it could be a good idea to allocate.
Sure. Ronak is asking, do we have any more plans of introducing new small cases in the remaining 3 months of this year?
New small cases.
Yeah, any new
Yeah.
themes, any new
So
baskets?
do you guys have any ideas that you think we should play with?
Yeah, please let us know in the comments if there's something specific. I've seen a few, I think in the semiconductor video that we put out, and also
Yeah.
the
Thematic sectoral video, whenever we do, somebody always asks, is there going to be a small case on this thing?
yeah.
Yeah. But
Um,
yeah, see, many of those new age things are covered in the new day manufacturing and in our innovation related. Plus, they keep on coming in our portfolios also, right? So many of those stocks will keep on coming up in our all our other portfolios.
yeah. Mr. Preetham is asking, can the small cases that we listed, the ones that we were talking about earlier, do you think they would work in a sideways market? And maybe you can shed some light maybe on, I think 2022 was a sideways market.
Yes, yeah. See, sideways market, again, see, markets, bullish market and bearish market is very simple definition. But even in the bearish scenario, there are two things, right? One is the deep correction when nothing works, right? And there is the slowdown or sideways where you will see suddenly people start liking safer stocks more in comparison to the riskier stocks, right? Uh, so I think that is the scenario where we are in. I've done this. I was showing this analysis that right now over the past couple of months, all the defensive stocks are doing way better than cyclical stocks, and I think that trend could continue for a while. So in sideways market, you see safer people rush towards safety, high quality safety, and there are pockets that still do well. Now they will not do, for example, 70% returns, right? They will give you probably moderate returns in comparison to the market. So in 2022, we ended up doing 10-15% better than the market, but still our performance was quite muted, right? And so yeah, we expect strategies to do better, but then the opportunities are quite limited in those scenarios.
I just happened to look at chat, and a few people have asked about the upcoming Bangalore meet. So I'm just gonna put the link in the chat. It's on 20th. We're planning to do it around, I think, 1 to 2 p.m. in Bangalore. So you can just register on the form, and you will be able to sort of.
Yes, and please do let us know where you would want us to host it. Bangalore is a very large place. Also, somebody just messaged me, Siddharth. There is, I think, Karwa Chauth on that day.
Oh yeah. Sunday is I think so. Yeah, you're right. But yeah, I think Saturday is a bit busy for us. I think Sunday is unfortunately the only day
Yeah,
that's
yeah.
available. So back to the questions. I think we've got about 8 more minutes. I'll try to take up as many as I can. There's a question here from Harish. He's asking, he's a holder of Alpha Prime. During some of the rebalances, he sees existing stocks get sold fewer numbers than actual stocks exit. Is it okay to rebalance the suggested small case? I think he means if the stocks have hit an upper circuit or a lower circuit, depending on the buy or the sell, um, what should he do in that sort of scenario? I think that's what the question here sort of talks about.
I think there is a phenomenon in Alpha Prime that there's a lot of movement around the time we rebalance. So I think better strategy is to just be on a lookout on a Monday and rebalance your portfolio at 9:15, right?
Mr. Vishal was asking about again Alpha Prime expected returns. I think you can sort of have a look at the history of the portfolio to just
Yes.
get a sense of
Yeah.
it. And he's asking what is our favorite in the next 1.5 years. Again, maybe just rewind the video maybe like 15 minutes and you sort of get an answer for that question. Mr. Trived Makadia is asking, is it a good time to invest about 10 lakhs in Alpha Prime, seeing current recession or correction of the markets again for a long-term horizon of 3 years plus?
I think it's an excellent strategy. It has shown its potential multiple times and quite consistently. And if you're looking for long term, why not invest? Right? I think it's a good time to allocate.
Sure. There's a question here from Chirag. He's asking about the number of so the US recently released the jobless data, and there's a probability data shared that I think you shared in one of the presentations. So he's wondering, why do we think that they're not necessarily near a recession, the US economy specifically?
There are quite a few factors through which they predict recession, right? One is jobless claims, one is consumer sentiment, one is those yield spreads, right? Whenever they're seeing them reversing. So there are quite a few things that people monitor, and then those models are a combination of those factors. So given that right now the probability is, I think 35 or 45, right? And it's a mixed probability. It's not extremely high. It is moderate. And yeah, I think that is and I think data definitely has an impact. So we talked about another data that came out, which was on the the inflation data, right? Actually, your CPI, PPI inflation has risen a little bit in the US, right? So maybe the rate cuts were a little bit nearsighted in that sense. So that will have an impact on inflation, on the recessionary trend. So it's a combination of data points, and I think that fear is moderating right now, and there's still a lot of positives in the economy. US economy is growing at a fast pace. So we like I think they might avoid that recession, but again, we have to watch the data.
So I'm just seeing a few queries on the Bangalore Meet. If you're not able to sort of see the link, I have posted it from the right account, but you can probably just find it on LinkedIn or Twitter handles of ours, where you can just go and register for the meet. There's a question here from Satya. He's again asking about rebalance updates. It'd be a good time if Wright can sort of give out notifications when there is a lump sum investment opportunity. So I think your thoughts on that.
We do post it for few of our portfolios. For example, for the HNI one, where we have a greater interaction with our customers, we try to post this. But yeah, we can post it on our social media, or Siddharth on a mailer, right, if needed.
Sure, but we will definitely look into it. I think we've just started doing it for the HNIs as well, so we can figure out one way of doing it. There's a question here from Suresh again. What is the difference between HNI and a normal investment? Is it possible to invest and exit with HNI? And is it that HNI looks at any specific sectors for the investors and he's happy with the current session?
See, the difference is, see, in terms of strategies, it's different, right? Second thing is the HNI one tends to have slightly longer universe. It's a need-based rebalancing, but plus it has a limited access, right? Not everybody has access to that one. It's slightly more expensive, right? So you can allocate more to that if you're planning to do it. That is the difference.
Sure.
But yeah.
So Harish has just sort of commented on his clarification. So I think I've understood. So when we do any small case rebalances, there's typically a main rebalance that happens of, let's say, 2 or 3 stocks are being bought, 1 or 2 stocks are being sold. But with that, some of the other stocks weightages have changed as well when we push them out. So he's wondering, should he be doing the full rebalance?
So,
Should he be doing
so I think,
partial?
it's a good question. And I think we've spoken about it quite a bit in the previous years. And so that maybe we can post that video or reiterate on that. So typically, whenever we are sending a rebalance, you will see in the rebalance message, we clearly mention that these are the additions, these are the deletions. And if there is significant decrease where we are making a decrease or increase, we'll say this decrease, this increase, right? But and then what you can do is, before rebalancing, there's an option to manage that, or to modify it. I don't know what it is called, update that rebalance, and then you can manually go and reduce all the trades where we are not intending to trade. Because what happens is that we might assign weights on small case, but due to the price fluctuations, there are small tiny trades generated here and there. So you can just manually go and reduce those if you want to exactly follow a model. If you want to customize it in any which ways, you can do that as well.
Sure. And just a follow-up question. So when the rebalance is pushed out and there are these, the main 3 or 4 stocks are being added, removed, if there are other, let's say 8 or 9 stocks where the percentages have changed, that also they should follow, or should they do
Yeah. So that's what I'm saying, that you can ignore the other 8 or 9 stocks where you're seeing those changes.
Sure. Right? There's a question here from Anantanath. He's asking, what is your outlook on the defense sector? Will it benefit from all the global tension that's there in the world right now?
See, I think on the defense sector, there was a lot of announcements that happened last week, right? I think they've got some large deals, and we saw a big resurgence day for those stocks on a specific day. But again, I think as a theme, it might take some time to recover. See, I think defense, obviously, there's a huge need of defense because of the escalation geopolitical events. But for the defense companies which are doing manufacturing or R&D and this and that, right? I think their growth is linked to the economic growth, right? The growth in the overall economy, which has seen some slowdown. I think it will take maybe some time for that theme to recover from here. But see, there's a lot of fundamental positives in that segment, and like we've talked about it in our video also, India is trying to become a hub for defense manufacturing. They're trying to export defense equipment, and so much amazing research is happening in India. So it's a good sector definitely for the long term, but timing it is, I think tricky in the current scenario.
Sure. So I think I'll probably take one or two more questions that I can see, and then we'll probably wrap up here, given that it's been quite a long conversation. This is from Neo. He's wondering how we are actively managing the small case. Is it that you are also involved in the process? Are there other advisors that are working on rebalancing these portfolios? He's just wondering about the process in totality.
We try to follow some systematic strategies to do this, and that is how it goes. Obviously, our team works. See, we don't intervene with what the model says, but we actually go and touch our model once in a while, right? For example, when we, let's say, realize some theme is working in the market, and our model is not picking it up, we'll just go and look at the data and see why we are not picking up, maybe modify our model a little bit. Or let's say we are still invested in a theme which is correcting, we'll try to see why that is happening, maybe modify the model. But yeah, we rely on a model for everything.
There's a question here from Mr. Shankar Rao. He's asking, can he shift from the small case to HNI, from an existing small case to HNI? Can he get any concession on the fees, etc., etc.?
That you can answer that question.
So the shift doesn't. There's no way of shifting your stock from one small case to another. That's just not possible. And there may not necessarily be any overlaps in your existing small cases to what we're offering on the HNI. On the concession, there's no discount on the HNI currently, nor do we expect to be giving any discount on that portfolio. Finally, I think Harish has asked one last question, and I think we can wrap up. Anything available for mutual fund recommendations? Any thoughts on mutual funds? Yeah, that's
mutual funds. Yeah, so we have a few mutual fund baskets on our website where you can actually choose them basis of your risk profile. Will help you profile your risk also if you want that. And I think I think Smallcase might also give you some opportunity to do that in the future. So yeah, I think you can look at that. We are also trying to, we are not mutual fund experts, right? Very honestly, we have a few models that work decently well. We are trying to add more people with more expertise in that.
Sure. I think we can wrap up today, Sonam. It's also Dussehra. I'm sure people might be celebrating. So yeah, we can probably wrap up now.
Thank you. Thanks for everyone.
Thank you, everyone. Happy Dussehra. And if you're in Bangalore, please do come by. The link is in the chat. Feel free to fill it out, and we'd love to meet you. Thank you. Take care. Bye.